Hey, what's up, everybody? It is Monday, July 20th. Hot day here in New York City. I guess for about 95 degrees, but it's okay. I like the heat. I love the summertime. Hey, a surprisingly strong rally today in the NASDAQ, reaching new highs. Now, again, these are basically the same 7 stocks. You got Amazon, you got Microsoft, you got Google, you have Facebook. Tesla was up big today. So, it's the same names that everybody's piling into. But I'll be honest, I was surprised at the strength of this rally. Now, I spoke about this on Friday, the fact that in the last 3 days, with those tax payments that were due last week, 76 billion of individual tax payments were taken out of the economy. 76 billion in individual payments, over 50 billion, about 53 billion in corporation income taxes were paid. So what's that? 120, 130 billion. You look at deposits in the system, in the banking system, I like to call it, that's like the proverbial cash on the sidelines. You had a very dramatic and rapid reduction in that cash over the last few days. Now, what I've pointed out is the fact that in normal times, even in normal times, by the way, you know this saying, if you've been in the stock market for any length of time, you know this saying, sell in May and go away. Why is that? Because tax payments in April cause the period just following that to be a little bit tough. It takes time for companies and individuals to earn back those tax payments. So the economy typically goes into a slowdown in that period, and you have the stock market coming off. That's why we have that sell in May and go away. And it doesn't happen every single year, but it is a seasonal effect, and we usually see that happen. Now, of course, this year, those April tax payments were deferred. They happened in July. So it could be, sell in August and walk away. I still think we're going to have that effect. I would just add one thing here, that the Senate Republicans are working on another stimulus bill, which would include another round of $1,200 checks and a payroll tax cut, but a deferred payroll tax cut. I'm not quite sure how that's going to work. So we got to keep an eye on that. But the House Democrats, Nancy Pelosi, she's against the payroll tax cut. Anyway, there's time. We're going to see what happens on that. They're going to have to go back and forth on that bill. They're going to have to vote on it. The point I'm making is the cash drain, the money drain that has happened over the last few days since, mid last week. I think it sets up another one of these sell in May and go away types of phenomenon, only it gets pushed into early August. Now, again, let me remind you that at the end of this month, we're talking about 11 days from now, those $600 supplemental unemployment benefits go away. There's one more thing. The only tax flows that are not now positive year over year remain the employment and withholding tax flows. And those things, as I have been pointing out now for weeks and weeks, they are indicating problems in the labor market. And we saw, for example, last week and the week before that, the weekly declines in unemployment claims have been very, very small. They're not dropping like the way they were back in May and early June. And I would not be surprised to see in this Thursday's report a rise in weekly unemployment claims. In other words, the trend's starting to reverse back up. In any case, we had a big rally in the NASDAQ today, everybody piling into 7 stocks. Dow was flat, S&P up 1%. Same fiscal trends are in effect. I mean, very, very strong spending. That continues to be, a feature of the fiscal landscape, so to speak. But again, a lot of the economy still remains shut down. We're running at a reduced capacity, a lot of people out of work. But the market has been extremely resilient. So let's see what happens. That's the update. Oh yeah, it's Monday, so I put out the new edition of MMT Trader. Again, in there you will see some mixed data when it comes to the banking situation. We had another decline in commercial and industrial loans. That I think is about the 8th week of consecutive declines there. And we saw a little bit of a pickup in consumer loans, and in particular that closely watched credit card and revolving credit series. That was up for the 3rd week. Small, not a big increase, but it does point to the fact that we're seeing some consumption come back, credit cards being the way that many people choose to pay. So, that is a good indicator right there. One final thing, and I think I mentioned this last week, food stamps. Now, I look at food stamps as a barometer of economic stress. When economic stress rises, people out of work, lost income, etc., you tend to get higher payouts in food stamps, and that has been on the increase for the last 3 weeks. So that is not a good sign. All right, everybody, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. And don't forget, listen to my podcast. The links for both of those things are in the description below. See you tomorrow. Bye-bye.